market hasn't opened yet, and broker Gary Haskins is at his desk figuring out what this day will be like. He's concerned that bond prices are falling. The money supply was unexpectedly high after the close yesterday. Gary fears the market will open sharply down today and is likely to decline further. In this situation, Gary relies on stock index options to obtain short-term results for customers while protecting their portfolios and their potential for long-term gains. Last night, the New York Stock Exchange Index closed at 96.75. Gary decides that the purchase of NYSE 95 puts, which provide an option on the market as a whole, makes good sense for one of his customers. Shortly after 9, he calls that customer with a suggestion to buy 10 contracts at the market.
Yeah. Okay, it's done. I'll call you with confirmation. Right.
Gary's handwritten order will be entered into his firm's computer system, which will send the order directly to the Index Options trading post on the floor of the New York Stock Exchange. This is the Index Options trading post at the New York Stock Exchange. It is about 40 minutes till the opening, but everyone is getting ready. Orders are already coming in. Gary's order comes in on the DOT for Options terminal. DOT is an electronic linkage between a branch office and the New York Stock Exchange. DOT's main function is to increase the speed and reliability in getting orders directly to the trading post and then getting reports back to the brokers. The orders are stored and displayed on the DOT terminal, so there's no paper to be handled. The central figures in index options trading on the New York Stock Exchange are the specialists. All trading is conducted through the specialists. One of them handles calls, the other puts. The specialists are committed to buy or sell in size in order to ensure liquidity in the market. There are other competitive options traders who are dealing for themselves, often competing with the specialists. The combination of both specialists and competitive options traders at the New York Stock Exchange creates a strong competitive market in index options. Floor brokers know they can look to any of several dealers to find the other side of a trade. As the opening approaches, brokers prepare early orders and wait. When the market opens, the first activity in index options trading is the opening rotation. This establishes the opening price for each index option series. All market orders received before the opening are executed at this price.
3 to an 8. How many? 5. Trade over here with him. You did 10 Hunt and 10 Wagner. Step pause.
The opening rotation on the New York Stock Exchange proceeds in a fast, orderly fashion every day. For example, in the case of the SEP 95 puts, Gary's order, the DOT for Options system automatically pairs buyers and sellers and indicates the balance to be executed against the trading crowd.
500 up.
In all options markets, each option series is opened sequentially by means of a process that rotates from option to option. The New York Stock Exchange options market, however, has simplified and speeded up the process.
You do 15.
The opening rotation is about to get to the September 95 puts, the index option Gary is purchasing for his client.
The market's an 8/3. September 95 puts. How many can I do my own?
The opening price was set at 1 1/4. Gary's order to buy 10 SEP 95 puts was among those traded at the opening. Within minutes of the trade, and at the touch of a key, DOT sends a report directly from the trading post to Gary's office. There is no delay in waiting for reports of opening executions while the opening rotation continues. The New York Stock Exchange believes that in a market where prices move quickly, orders and confirmations must also move quickly. As soon as an option series is opened, the prices are sent out over the various quote networks and displayed on a screen at the trading post. And once all strike prices for an expiration month have been opened, trading in those options keeps going. Unlike other exchanges, the New York Stock Exchange does not delay further trading until the entire opening rotation is completed. Once an expiration month is opened, it stays open. A key feature of index options trading on the New York Stock Exchange is the opening rotation. The dot system plays a big part. It streamlines the way orders come in and the way reports go out. The orderliness, reliability, and speed that result from this method of handling the opening process give Gary and brokers like him greater opportunity to enter the market sooner and to react sooner if market opinions change. Gary has called his customer to confirm the purchase and the price paid. Now he is talking to another customer who thinks the market may be leveling off. The customer wants to sell index options and collect the premiums. He has in mind a combination sale of November 90 puts and November 100 calls. With that combination, he'll make the entire premium if the NYSE Index stays between 90 and 100 until expiration.
I do have a recommendation. I think that
the November 100 call last sold at 2.5. The November 90 put at 7/8. That's 3 3/8 for the combination. The posted bid is for 3 1/8. For simplicity's sake, let's assume that the customer receives a 3 points premium. On the downside, the break-even point is 87 on the NYSE Index. But with the index now at 96.24, a decline of more than 9 points, or 10%, isn't thought likely. In a combination sale like this, the investor has an upside break-even point as well. In this case, it's 103. If the NYSE Index should finish at a level outside the break-even zone, losses would be incurred. These could be significant, depending upon the size of the move. But a 3 points premium means there is a potential profit of $9,000 on the 30 contracts the customer wants to sell. The risk-reward ratio seems favorable to Gary, as long as the selling price is no less than 3 points. A complex order like this one, including both puts and calls, requires extra attention. Gary calls his firm's special handling desk to get his combination order to a skilled floor broker. The desk will also keep Gary posted on the status of the transaction. On the floor, the broker asks for and gets quotes on November 100 calls and November 90 puts.
Bars, how are they? 2 3/8, is that right?
100 up. No 90 put.
13, 15, 100 up.
The floor broker first asks for quotes on the November 100 calls and the November 90 puts separately. Then he decides to offer the combo for 3 1/4, a better price than the sum of the bids for its two components.
I can sell that combo, no par pull, 90 puts at 3 1/4, 30 times.
You did it 30 times, 3 1/4. Anybody else?
Yeah, let me do it. I can do it 10. I'll do it
10 over here, 5 over here, 5 over here, 5 over there.
The specialist took the floor broker's 3 1/4 offer for the combination. Several competitive options traders in the crowd wanted to participate, so the specialist allocated the 30 contracts among them. Competition on the floor helped our floor broker get a better price for Gary's customer.
How's that combo now? Walking in it?
The market has been open only about 20 minutes, but the speedy opening rotation and each expiration month staying open for trading once the opening price is set clears the way for a combination order like Gary's. Gary will soon be able to report the sale to his customer at a better than expected price. The New York Stock Exchange offers another important advantage. The NYSE double index option, identified by the symbol NDX, which is twice the value of the NYSE composite index. Its advantage is that the daily price fluctuations cover a wider range. This greater price sensitivity of the NYSE double index provides more frequent trading opportunities to those seeking to take advantage of short-term market advances and declines. Having two index options, the NYA and the NDX, that are based on the same group of stocks, provides options traders with greater flexibility in choosing the specific options which best suit their investment objectives. Two liquid options give brokers and customers a choice.
Jay,
795 is 1 bid out of Steve, 100.
I'll sell 100 at a buck.
You sold $100.
Who's bidding?
1 bid. 10. Straight 10, 10, 10, 10.
Now that you've seen how our market works, we also hope we provided you with some insight on why it works so well. The efficiency of the dot system combined with the orderliness of the specialist plus competing market makers and the constant availability of a market that's provided by our unique handling of the crucial opening process. They all add up to one thing important to all brokers. brokers, a market that is there when you really need it.